All right, good morning, everyone. Welcome back. There we go. Welcome back to another Market Open live stream. So we've got weekly jobless claims. This is different from the unemployment report. It's just how many people are filing for unemployment, falling to 360,000, which is good. We want to see some strength in the economy. I was reading a little bit more about the Fed, and you've really got some contention at the Fed as well. You've got, for example, Fed Ballard. He's one of the bank presidents. He's like, no, we got to start tapering. We got to start tapering. It's just really interesting to see that, even though we think like, the Fed themselves, they're unanimous. They're not. They're not at all. Over there as well. It's kind of like, probably very much like the debates that we have, that half of us are like, hey, we think inflation's a long-term big issue, and the other half are probably like, no, you know what, it's really not that big of an issue. So I guess we'll see how things develop. We'll see how things go, but I find that very interesting. So specifically, if we feel like it must be the Fed that is so united almost in their ways, but again, don't think so. All right, so let's see what else we got here. Let's see here. Yeah, inflation's definitely a big issue for sure. All right, there we go. So let's see what we got over here. This is take a look at this. I wanted to jump in over to this here. So Bloomberg.com, Reddit traders are upending the world of credit investing too. It was a type of masterstroke that could make a Wall Street career. Jason Mudrick's financing of AMC at the height of the pandemic netted the hedge fund hundreds of millions. Then, in the blink of an eye, it was gone. Option contracts meant to hedge the bullish wager went haywire as retail traders flocked to AMC, pushing shares to once unimaginable heights and costing Mudrick Capital all of its gains and more. Anyway, distressed investors have long had to have thick skins taking care of. All right, so where are we going here? So we're just talking about basically the debt markets getting kind of screwed over as well. But anyway, indeed, many fund managers say that beyond disrupting their ability to hedge, retail traders are increasingly propping up troubled firms, further limiting the universe of investment opportunities. Okay. Clothing chain Express, prison operator Geo, coal miner Peabody Energy, and others like AMC have seized on their popularity among day traders to seek equity financing, an option historically out of reach for companies with high debt loads. This is really interesting. I mean, basically they're saying, hey, all you Reddit traders are making it harder for us hedge funds to make money making loans to people, because instead of us being able to make loans to people, the companies aren't even asking for loans; they're just selling shares. It's kind of interesting. Personally, haven't thought of it that way before, I have to say. All right, so that's a good one. All right, let's go ahead and go to the sticks here, and then we'll get some more updates on what's going on in the market. By the way, let's see here. There we go. All right. So what do we have over here? We've got GameStop at, it looks like momentum again getting burned a little bit here. Let's flip over here. Oh, no, that camera's down. All right, no worries. Haven't turned that on yet. It's too early in the morning to turn that camera on. So GameStop 622 to the downside here. Looks like we've got another rotation to the downside, unfortunately. GameStop down 669. AMC down 571. We've got Cleverleaf 290. Marathon 325. Hut 8 Mining down 213. Let's see here. Let's go to the upside. Ocugen's moving up. EXPI Marin moving up. Shift Technologies moving up a couple percent here. Nothing huge happening here in the pre-market. Couple percent here, there. Couple percent down. Few up, few down. We got Tesla at 0.63 to the upside. Apple 0.17. Peloton's flat after a 5% decline yesterday. And let's see, Twitter's over here at a third of a loss. Yeah, Coinbase down to 227 again, back into the 220s. Crypto falling again Take a look at this. 31,733. Kind of been following this pattern here lately where we just go down and then up and down and then up. But this was yesterday. We literally fell to the same point yesterday. That's the same phase here over and over again. No shortage of buying the dip opportunities. Jeez. All right, let's hit CNBC just for a moment. So we got Jim Cramer here.
The fact that the stock has run so much is against it. My charitable trust of those three.
By the way, you've said the same thing after every single earnings report this week.
Well, I've been right.
No, I'm not saying you're wrong, but the stocks have been down all week.
I want to take that back. That made me sound like a total jerk.
The stocks
have
been down all week. The earnings reports have been generally strong, but the market has not certainly risen to the occasion.
No, but
in fact, yesterday Bank of America was down.
Well, that was one of those
sharply.
They need the net interest income was flat.
Yeah.
If they could ever get a Fed rate increase, they would do well. Wells Fargo, I think it's really important to point out, versus 2019, this is over. Travel's up 11, entertainment up 38, restaurant up 28 versus credit card use up 13. Net, by the way, NII was stable. Net interest income was stable there. Reduction in expenses. And how about this? They took out 2 million square feet of various branches and building. And this is Charlie Scharf now ready to play offense. He did say that a tremendous number of his people that he's hiring now are to play offense. Almost everybody earlier was defense.
Well, and now we got Evercore adding Visa, MasterCard, tactical outperform on some proprietary data that shows that cross-border spending is gonna grow.
It's going to come back. And MasterCard's really, both companies are very well run. I think that the one that everyone's buzzing about is a Mizuho call saying that Square could be the equivalent of investing with J.P. Morgan in 1871.
Oh, well, they went back to 1871.
Literally the first line of the report.
Yeah, the first line. And that, that's an interesting. They're saying that
it was a big year.
All right, I'm going to go ahead and pull off Jim here. We'll go ahead and hop back on over at 6 and kind of observe a little bit. See what we got here. All right. So, interesting market that it really what it feels like. My expectation. This was yesterday, which yesterday was pretty painful. What it feels like is a very nervous market, a market that's very uncertain about the direction it's going, just because there's really nothing that feels very consistent about rallying right now. There's nothing that feels that way. It's a very nervousness, or a lot of nervousness is probably a better way to put it. But anyway, I mean, think about it. Crypto's showing nervousness. Momentum stocks are nervous. The things that are super safe or potentially super safe, those are the things doing okay. S&P 500, the Dow, the Apples, the Amazons. But then again, those Apple and Amazon, they traded sideways. But otherwise, the rest of the market try to run a little bit, we pull back. We run a little bit, we pull back. It's just been a pattern over the last 3 or 4 months here. Companies like Microsoft, though, incredible moves here by companies like Microsoft. Again, the safer ones. S&P 500, really just incredible growth. Starbucks, really good growth. So your safe favorites are really just the ones who have been outperforming here in 2021. Anything with a little bit more of a valuation has been trading like this. Now these companies did better last year, but look at that. You've got Redfin. It's just up, that's down, it's up, it's down. It's the same thing here at Lemonade. Same thing. Let's find some more here. Don't even get me started on anything momentum based. Of course, anything momentum based is going to have a chart like this. But let's go to let's look at Twitter here. See, Twitter, it's like in the mix here, half, right? Google, straight up though. Like if you were just looking at Google, Apple, Microsoft, Target, you wouldn't even know. You wouldn't even know that there was nervousness in the market. Recovery stocks, they've trended down recently. Pretty clear trend lines too. I mean, this is almost a perfect trend line here. Look at that on this is on Marriott. Gee whiz. Yeah, look at that. That is almost a perfect trend line. It's incredible. Let's see. Home Depot. How's this one? Yeah, Home Depot. Okay. Wow, this was such a nice run for Home Depot. Look at that. It's just pure green. Obviously in the average candlesticks, but anyway. Amazon finally showing a little bit of love. See, Amazon was range bound for a bit, unlike Google. All right, let's get into here to AMC. So interesting thing about AMC is we're not like flying down to the 2881 support level here, but we certainly broke through this channel pretty quickly, the 5085 to 4136 level, and now we're sitting just below. Well, I actually don't think we have a particular line that we can refer to here. 50-day moving average, maybe. Rising a bit now into the open, which is nice to see. A little bit of a rise here. Facebook's too expensive now. Catch that knife, someone says. What's your, let's see, go Disney. Disney, yeah, let's take a look at Disney too. Disney. All right, Disney sitting at 183. I mean, that's pretty nice. Disney's just been kicking butt a little bit recently too. Although, then again, it did run up to about 200 in February, March, and it has sold off since then and been trading a bit sideways. Yeah, see, look at that. It's really done the recovery move, the recovery downtrend, and it's only recently started breaking out. Let's go ahead and pop on over to, let's see here, Fox. Okay, Fox on commercial. All right, let's, I'm going to play this for a moment. I have to replug my mic in because I cannot hear myself or the TV. So give me 1 second. I was able to hear Jim earlier, but that stopped. Give me 1 second here. I'm going to replug this. I'm just going to play CNBC for a second.
And back to where they can compete, of course, fun with the group.
Look, I'm diehard fitness enthusiasts who don't have the schedule of got to do it in the middle of the night or first thing in the morning. You want to get on a bike, that's fine. But eventually that becomes, stagnant. It's boring. You want to be in there with the energy of people working out with you, alongside of you, inspiring you, pushing you, and supporting you. And so for me, I was always the guy who would work out by myself at 4 o'clock in the morning. By the time I went into a studio, I didn't want to do anything else. The energy
should have given me a jingle. I'm at 4 a.m.
Hey, the energy is absolutely incredible when you see how excited when we opened a studio in Studio City.
Got it. That's much better. Now I can hear. It just feels weird. All right. Not being able to, but now I can. So sorry about that. All right. Perfect. So, okay, these are the arrival warrants. Okay. So Arrival. Let's Arrival up a little now. Let's take a peek again. Those are the warrants. Let's get out to the actual stock here. Arrival at 1337. Let's see, pre-market plus 0.75. Okay, up a tiny little bit here. So how else are we doing here? Cannabis ETF up 4.57. Cannabis has had a rough ride as well. Let's jump on over to the sticks. Just look at cannabis over this the year here. Really, I think it's really the realization that Biden wasn't going to be able to come in, or the control in Congress wasn't going to let Dems do absolutely everything they want, essentially led to this slow bleed out of cannabis. But it was a trend that it still is. It's a trend that's just been a terrible bleed out of momentum. I mean, cannabis was so hot for such a period of time, from really the election through February, but since then it was straight down, and that was pretty consistent in a lot of different cannabis companies. It's unfortunate, but yeah, well. All right. Wow, Emeren. Whoa, this just happened in the pre-market here. Emeren all of a sudden down 14%. Oh yeah, there it goes. Look at that. All of a sudden you get some larger share sales coming in on Emeren. That'll do it. AMC down 4.7. GameStop down 5.72. Clever, Virgin, Hut 8 Mining. Hut 8 Mining 2.36 to the downside. Marathon 2.35. Arcimoto's down a couple percent again. Arcimoto's, it's it's been a rough ride for some of the auto manufacturers. I mean, look how rough this road has been for Arcimoto. It's just a rough road, and it's this bleed out consolidation that's definitely tough for anybody who picked up options in like February or January. Yeah, but it's been the same thing over here at Neo. You get the little runs, and then you get the fall. Yeah, Tesla, same thing over here. You got the run, you get the falls. Although the consolidation over at Tesla isn't as bad as at some of the other companies, but it's certainly been volatile. Lots of ups and downs. A lot of folks, by the way, saying that Tesla earnings may be affected by their Bitcoin position. In which case, maybe Tesla, like the data buy Tesla stock is the day of earnings. Who knows? Maybe that creates a buy the dip opportunity. I don't know. I'm pretty optimistic about Q3-4 revenues. So the next sets of revenues that we get and earnings. As far as looking back to or going into Q1 for 2022, that's gonna be a little rougher. That's where I get a little bit more nervous. But I will be curious to see how things change for the next quarters. All right, let's see. Yeah. Somebody here says not sure what to do when the market's right. The problem is the market hasn't been that red. I think that's one of the downsides of this market is it's just been. I like to think of it as more of like frustrating. It's been one of those where it's just sort of sideways. It's frustrating for hodlers. Now, it's really good for people selling put contracts. Remember, you sell put contracts, you're able to get in and average into some of your favorite plays cheaper, and you're able to pick up credits along the way if you don't get assigned. There's some wonderful opportunities in that. Now, oftentimes when I talk about options, there are folks who are like, oh my gosh, how dare you talk about options? That's risky. It's like, well, I mean, if you're going to buy a stock today, buying a put option is not horribly different than just buying the shares because you're promising to buy the shares at a certain point in the future. That's it. So when you put the money aside, then the risk is a little bit more limited. But anyway, sideways markets, selling contracts, great thing to do. All right. Netflix plans to offer video games in push beyond films. Creator of Dogecoin made a brief statement in order to blast all of crypto. What? All right. Let's see. Let's see. What did he say? The whole thread is here, but the first two tweets grab the gist of it. I'm often asked if I will return to crypto or to begin regularly sharing my thoughts on the topic again. My answer is wholeheartedly no. But to avoid repeating myself, I figure it might be worthwhile to briefly explain why. After years of studying it, I believe cryptocurrency is inherently right-wing, hyper-capitalistic technology built primarily to amplify the wealth of its proponents through a combination of tax avoidance, diminished regulatory oversight, and artificially enforced scarcity. I like how one of the Bloomberg people hearted one thing. Despite claims of decentralization, the cryptocurrency industry is controlled by a powerful cartel of wealthy figures who, with time, have evolved to incorporate many of the same institutions tied to the existing centralized financial system they supposedly set out to replace. The cryptocurrency industry leverages a network of shady business connections, bought influencers. There's a lot of money that goes around to influencers for hyping coins. I don't do it at all. I refuse to take money. I think we have like almost crypto pitches on like auto archive because it's just so, I don't know. I get so nervous about tokens and stuff like that. And again, not to say I'm not a fan of like Cardano and Bitcoin to some extent, but its position in my portfolio is relatively low. cult-like get-rich-quick funnel designed to extract new money from financially desperate and naive. Wow, this is a rough thread for crypto. Financial exploitation undoubtedly existed before cryptocurrency, but cryptocurrency is almost purpose-built to make the funnel of profiteering more efficient for those at the top and less safeguarded for the vulnerable. Cryptocurrency is like taking the worst parts of today's capitalistic system, example, corruption, fraud, inequality, and using software to technically limit the uses of intervention, audits, regulation, taxes, which serve as protections or safety nets for the average person. Lose your savings account password? Your fault. Fall victim to a scam? Your fault. Billionaires manipulating markets? They're geniuses. This is the type of dangerous free-for-all capitalism cryptocurrency was unfortunately architected to facilitate since its inception. Oh my gosh. Wow, this, yikes. Of course, there are going to be detractors who argue he's resentful that he built this ultra valuable joke and never cashed in. Never cashed in, my goodness. Huh. Yeah. That's interesting. That is very interesting, especially at a time when, like they say here, El Salvador is going all in. All right. Let's hop on over to Varn's here.
Or you insert your word. A lot of people need the money right now, and I feel bad for them, but the income levels are relatively high for which you can get these credits.
So some relatively wealthy people, I mean, I use that word advisedly, but some
middle class,
financially okay people, middle class people, they'll get the money.
Absolutely, and they might have done it already.
Okay, so they rolled out the bank account filler-uppers as of today.
As of today.
So some of our viewers could actually check their bank accounts and they might see some extra money.
Right, because if you e-file your taxes, the IRS and Treasury have all your information, so they can determine if you're eligible, and it goes right in.
How about that?
It's immediate.
This is true. This is the $250 a month or $300 per month child tax credit. It starts going out today.
Expensive.
Yeah, it's cash welfare. We're back to that. Futures show down for the Dow, down for the S&P, not much change for the NASDAQ. Gary Kaltbaum is going to be with us. He says we're in the ninth inning of the bull market. Sounds ominous to me. He joins me next.
Yeah, it doesn't surprise me that John Apple here says I have Venezuelans preferring to be paid in crypto, essentially. Makes sense to me. All right. Well, let's go ahead and find out what else is going on. Little quiet on the news front, although this is interesting. This tweet storm here on crypto definitely comes at a time where crypto's been a little bit more nervous. Morgan Stanley investment banking boom fuels profit gains. Yeah, a lot of investment banking. It's good. It's been really good for the banks here. All right, let's take a peek here. What else do we have on here? Bridgewater managers back sustainable investing. Old news. Tesla correlation to Bitcoin. Wow. Blame Bitcoin. Tesla shares have become less correlated with those of large tech companies ahead of the EV makers' earnings report, and Bitcoin may be the reason why. Really? Tesla's highly correlated to megacap tech, and this relationship has really decoupled in the near term. When I ask around, the feedback I get is that this is related to their Bitcoin exposure and how it will have to be accounted for when they report earnings. Aha. Yes. Let's see. Are they going to talk about the accounting? No. They didn't even mention it in the article. Seriously. That's it. That's all they say is, and how it's going to be accounted for. And then they shut up. But I mean, it's a good point. I think Tesla's basis for Bitcoin is somewhere around 33,000 or something to that effect. Let's see. Tesla Bitcoin accounting. Let's see here. Bitcoin on the balance sheet is an accounting headache for Tesla and others. All right. Let's see here. Okay, but companies holding Bitcoin in their treasuries face an accounting risk because Bitcoin and other digital assets are considered indefinite lived intangible assets rather than currencies. Any decrease in their value below what the company paid for them, even a temporary one, can force the company to write down the value and take a charge. Now, we've done research on this before. Apparently, you don't even get a write-off for it, like a tax write-off for it, because it's just a gap rule. So rather than being able to write it down for tax purposes, you're really just writing it down for accounting purposes, meaning if crypto falls, you have this negative earnings weight that sits on your earnings report. Such assets must be tested for impairment at least annually, which is a decline in value. Once a company takes a charge that resets the fair value of the asset, conversely, if the price has gone up, the company can't record a gain. It only does that when they sell the asset. Yeah, it's so weird. But these are the GAAP rules too, not the tax rules. Tesla, which didn't respond, is projected to post a profit of 96 cents a share. The accounting is a little bit incongruous with the underlying purpose. Yeah, Tesla initially disclosed 1.5 billion in Bitcoin, but didn't specify how many coins it had or the average price it paid. What if Elon sold out 100%? That'd be interesting. That would be very interesting. So let's see what happens. That could be a slight loss, though. It's very true. All right, let's go back over here. Fox.
Well, at 28, we said we thought the Dow was going to 35 and the NASDAQ was going to 15. We actually think we're going higher here first. But look, valuations are in the trees and leverage with those valuations is in the trees. And that's two characteristics that usually is late innings. You add in all the bubbles that are out there and now internals, especially for what I call the vaccine /open.
Oh, yeah. Could you imagine if Tesla announced that they sold all of their Bitcoin? Like, how bad would that be? Ooh.
1 to 3 negative on advanced decline. So internals are starting to head south also. So I just be wary and do realize bear markets do happen. There should be a normal course of business, but Powell keeps preventing them. But I do think we're getting closer in the months ahead. We're finally going to get one.
What is it that puts it over the edge? If you think in a couple of months we might get into a bear market, what puts us in the bear market?
Crash.
Well, you asked a great question of one of your guests earlier. What is going on with yields down at 1.3 on the 10-year? For me, that's indicating real softness in the economy to come, if not worse. And if that occurs with inflation, you're talking stagflation, and that is a real bad news for profits, which sends prices down for assets. And simple as that. And again, bear markets do happen. We're overdue. And again, I think we're getting closer, and all the characteristics are there.
This is not a raging bull economy, is it? This is not a rocket ship economy at this moment.
Well, I call it the recovery economy from the pandemic, but we're nowhere near, big time. And it's a matter of whether it has staying power once we are totally open up. And I'm not so sure. And I have to add in one other thing. President Biden is looking to put the percentage of spending of GDP at 25% when the norm is 19%.
We got the bell. Let's hit the bell really quick and go to the sticks here to see how we open.
Company Hillman Solutions celebrating a listing via SPAC. Did talking to those guys make you interested in the shares?
Yes. I did not realize how little they pay for flywheel.
Here's AMC. Oh, here comes green on AMC.
And they spent a lot of money on it. I think they're a little pricey versus Planet Fitness, but I also know that a higher-end gym can be quite
clove down slightly at the open. All right, we are open. So, well, on the upside, the biggest runner here is really Ocugen. Otherwise, it's and that's even dropping a little bit. But wow, it's actually surprisingly not a lot of heavy green here. This is like very tentative green. Tesla's almost up 1% here. Churchill Capital 1.3%. Arrival 1.72. We have Neo and Wayfair here. at about 1/3% to the upside. Emrin down 14. GameStop down 2.5. Hut 8 Mining's up. Peloton, I'm sorry, these are down. Peloton down 1.9. GameStop down 3.42. Hut 8 Mining 2.13 to the downside. See AMC here as well around this 2% figure. Hive down 1.5%. Most companies on the list here down. We've got maybe a couple pages of green, but it's modest green too. It's very, very chill market right now. Let's listen to this because Powell is testifying here shortly.
Story.
General Motors is a suboptimal story in terms of, I think, David, in terms of charging the
bolt's not going. Yeah, it's indoors, outdoors. You got to keep an eye on it at all times. Don't bring it inside. It's not
Wahlberg
great.
gets up at 4. He could have one.
There's GameStop shares. Here's GM. Down to almost 1.5% on that news.
On AMC, which we asked him about, Wahlberg about. The battleground there is the July 30 puts.
By the way, this is the hearing where Jerome Powell will be speaking. It has not started yet, but it's actually scheduled to start right now with the market open. So we'll see what happens. Let's hit Bloomberg for a moment.
It may eventually normalize as well, but the question is, what does it normalize to? And if the bar has moved higher, I think earnings power is stronger than people appreciate.
Joining us now to dig into the numbers, Bloomberg, Shanali Basak. Morning, Shanali.
Morning, John. Seriously, it was a very good quarter in terms of equities for Morgan Stanley.
All right, they're live now. There it is. So mute Bloomberg for a moment, but here you go. This is where Powell will be speaking today.
Families have a little bit extra to help pay the bills. Beginning today, July 15th, most parents will see a $250 or $300 monthly payment in their bank account for each child. In my state, 92% of children are eligible. Small business.
It's for like 6 months. The rest goes on your tax return. Sort of a form of stimulus here. American Airlines up 1.37 here. We'll wait for JPOW. Lordstown Motors up slightly. Yeah, taking a peek here. Crypto still rotating down, although not as low as it was this morning, about 30 minutes ago. Upwork down again, 3.29 on Upwork. Whew, just a rough market for certain stocks. Certain stocks just getting beat up. Really everything except the big safe ones. Look at this, though. AMC was negative. AMC just went positive. Let's see. Yeah, here we go. Look at that run. That is incredible. It's a very nice run here on AMC. Up up 2% now. Impressive. Let's go to CNBC for a moment.
I think that American big traffic title, that's the one. Delta big traffic in America. But I don't know. When I fly Delta, I mean, they're full. I recently flew Delta and they were just full. But that's anecdotal, obviously. But
yes, it is.
But Ed Bastian pretty much confirmed it.
Next.
If it's not worth that, it's a meme stock on the way down.
And the fundamentals are very confusing at the moment. Lots of share sales, and they're still both expected to be unprofitable for the full year.
I want to see Moderna, the vaccine maker. Where's that?
Why do they got to be mean to the momentum stocks?
Jefferies has raised its target price for Moderna stock to $250 a share. They hiked this year's forecast for vaccine sales. That's why they're predicting this price. Moderna's market value topped $100 billion as of yesterday. It's up a bit more this morning, up 1.175%. AIG, and they've struck a deal with Blackstone. Full disclosure, I own a little bit of Blackstone. It's up today. What's the deal?
So the deal is AIG is splitting its life and retirement units off from its property and casualty operations. So Blackstone will now manage those insurance policies, those retirement plans. It's helping it become a bigger player in the insurance industry, and that's why Blackstone is also up. AIG is your best performing stock on the S&P 500 today.
Nice. I'm gonna hop into here. Look at this TDoc. Let's take a peek at some of these other ones here. So let's look at Teladoc, for example. Teladoc in the last few months has kind of just gotten wrecked. Unfortunately, I mean, it had its nice run here, sat on a support line for a while, bounced off of that support line a few days ago, actually. Yeah, about 2 weeks ago, and bounced off that resistance from this direction, and not doing too well here. Wonder how ARK has been. ARK, so yeah, RK, been a rough year for ARK. You know, let's see, January 1. It's right about here in this pit. You're down year to date on ARK. That's incredible. It's very weird to think that, but think about it. S&P 500, ARK being down on the year, and the S&P 500 being up 17.8%. That's not that much, but it's still 17%. I mean, that's a good year still, It's just the year isn't over yet, obviously, so it's too soon to really compare. But let's compare to ARK anyway. Go to the year. Yeah, just look at that divergence you have here in 2021. Such a great banger start on ARK and the technologies and that, and really kind of painful subsiding here. Obviously, last year, ARK tripled the performance of the S&P 500. But the S&P 500, it's just been this steady Eddie run here. It's like somebody just took a ruler to the market, and they're like, yep, no, we're good. S&P 500, straight line. All right, what we got here? AMC up 2.7 now. Wow. AMC showing a little bit of love, a little bit of a U-turn here at the moment. Facebook fired 52 users caught spying.
He sold Zuckerberg.
Yeah.
Has he sold stock?
Yes, it's not a negative story. This sale is worth $2.8 billion. He's actually sold stock, if you calculate it, every day this year. But where is it going? To his charitable foundation, where he and his wife vowed to pledge 99% of their shares over their lifetimes. So he stopped selling for about a year or two, and now he's selling once again, but it goes to the charity.
He's $3.44 a share. He's probably worth 60, 70, 80 billion right now. I can't put a direct number on it.
Me neither. The all-time high is 358, so Facebook is close to that.
So he's got all the money. All right. Thanks very much, Lauren. Don't Fauci my Florida. Yeah. How about that?
Oh, no.
You're looking at the governor of Florida, Ron DeSantis' new merchandise. Guess what? The left is...
All right, we're going to hop on over to
I'm worried
CBC.
about this whole...
They're still talking about Blackstone. AMC's brief red U-turn there has already turned green again. AMC presently up 5.5%. Look at momentum coming back. The apes coming back. Hope you're still hodling. Lordstown Motors, 3.96. Moving to the upside here. Emeren still getting smoked. Oh, yeah. Upwork down 4.91%. That's a big move to the downside. Especially following yesterday. Yesterday was down even more. Bitcoin still struggling around that 31.8 figure. I want to zoom out on crypto for a moment, or Bitcoin. Golly, look at that chart. It is such a weird chart. From obscurity into this beautiful run, into now this crazy consolidating, bizarro head and shoulders pattern that gets a little tighter, but unfortunately getting tighter to the lower side. Oh, well, let's keep listening in. Okay, Varn's on commercial. Fine then. We'll go to the hearing. See what they have.
Annual bond purchases is puzzling. The Fed's policy is especially troubling because the warning siren for problematic inflation is getting louder.
To me.
Inflation is here, and it's more severe than most, including the Fed itself, expected. And it is more than offsetting the wage gains, so leaving workers worse off despite their nominal wage increases. For the third month in a row, the consumer price index was higher than expectations. Core CPI, which excludes volatile categories like food and energy, was up 4.5% in June, the highest reading in almost 30 years. And to be clear, this is beyond the so-called base effects. The 2-year change in core CPI was at a 25-year high. And with housing prices absolutely soaring in many places to completely unaffordable levels, I have to ask, why on earth is the Fed still buying $40 billion in mortgage-backed bonds each month? Now, the Fed assures us that this inflation is transitory. but its inflation projections over the last year have not inspired confidence. Last June, the Fed projected that PCE, one standard measure of inflation, would be 1.6% for the 12 months ending 2021.
Oops.
Then in December, the Fed raised that figure up to 1.8%. And now the Fed's most recent PCE forecast for 2021 year end is 3.4%, more than double what the Fed thought inflation would be a year ago. But in coming months, the Fed is almost certain to revise that projection up yet again, because so far this year, PCE has already risen by 6.1% on an annualized basis. So for the rest of the year, inflation would need to be nearly zero for the Fed's latest projection to be proven correct.
Golly, he's going off on Powell.
Almost guarantees that it will be behind the curve if inflation does become problematic and persistent for several reasons. First, as I pointed out, the Fed has consistently and systematically underestimated inflation over the last year. Second, the Fed has announced that it'll allow inflation to run above its 2% target level. Well, it's already well above 2%. And third, the Fed insists that the inflation we're experiencing now is transitory, despite the fact that recent unprecedented monetary accommodation has certainly driven the inflation that we're witnessing.
You know, it's going to be so interesting to see what ultimately happens, because it'd just be so neat to time travel like 5 years out and just go like, oh, what ended up happening in 2021 with that inflation? Well, went up or went down or traded sideways. One of those.
Acknowledges that it's gotten it wrong. We could have a big problem on our hands. And past experience has shown it's very difficult to get the inflation genie back in the bottle once it's out. The Fed may have to respond by raising interest rates much more aggressively to rein in significant inflation, and that could have severe adverse economic consequences. So the Fed's current monetary approach seems based on the premise that it needs to prioritize maximum employment over price stability, despite the fact that employment policies enacted by Congress are clearly impeding our ability to get back to maximum employment. But I would argue it's not the Fed's job to attempt to offset flawed congressional policies at the expense of its price stability mandate.
Ooh.
And when the Fed subordinates its price stability mandate to try to maximize employment, the Fed runs the risk of failing on both fronts, because you need stable prices in order to achieve a strong economy and maximize employment. This is not a partisan argument. Prominent Democratic economists, including President Clinton's Treasury Secretary Larry Summers, President Obama's CEA Chairman Jason Furman, and many others have expressed their concern about the risk.
All right, we're going to pull off this for a moment. We'll go back to the sticks. Thank you, by the way, Tommy, for saying this. I just wanted to acknowledge you, shouting out the, I actually haven't mentioned that once today, that you could take advantage of that 40% off coupon code link down below for the course. Let's take a look at this. Tommy, if you're watching this from the sidelines, you're missing out since a week ago when I got the Stocks and Psychology course. Man, literally now I have an LLC. Yeah, the crazy thing about it is we go through so much in that course. There's so many lectures. Start with really beginner things, and then you quickly get to intermediate and advanced topics and business and taxation, and it's pretty fun. Of course, options in there as well. More TA, more options lectures coming. I'm always adding new and developing. Those sections still in development, of course, because there's still some pieces missing. But it's so fun. I'm glad. So thank you for shouting that out. Imran down 17% here. Upwork down about 420. HUD 8 down again. Let's zoom in on HUD 8 here for a moment. Oh, look at this downtrend here. It's sort of beginning, or has begun, this downtrend. Wonder if it'll go back to our 333 line. I mean, the way crypto's been behaving, it wouldn't surprise me to see a fall back down here. Look at SoFi is up 3% today. AMC up 7% today. Very nice. Workhorse is up. Looks like we got a little bit of love for the SPACs again and momentum here. And maybe they sold off a little bit too much, too aggressively. Is Powell talking it, or is this guy just going off on him?
I'm pleased to present the Federal Reserve Semi-Annual Monetary Policy Report. At the Fed, we're strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability. We pursue these goals based solely on data and objective analysis, and we're committed to doing so in a clear
Shannon, thanks for joining. Appreciate that. Happy to have you.
situation before turning to monetary policy. Over the first half of 2021, ongoing vaccinations have led to a reopening of the.
Okay, I'm going to pause. We're not going to listen to Jerome just read off his statement. Well, which his statement looks like used and like beaten up. But we'll come back to when he does a little bit of Q&A. Jeez. We got Root at 4.95%, AMC at 5.4% here. Oh, AMC, that must be a little bit of a pullback then. Let's go into the day here. A little slowing, yeah. A little bit of a slowing in this minute candlestick here relative to the last minute. SoFi still moving up 3%. Very nice. Lemonade, 2.52. Fisker, Arcimoto, Neo, Tattooed. Very nice. Slight moves to the upside. Emirates still getting burned, about 14% down. Macy's, Western Digital, Seagate. This guy's down 2.25 here. Salesforce. Gosh, Salesforce is another one that has literally traded sideways for a year. Look at this. Hold on. There you go. It's literally done nothing. Nothing since like September. That's nuts. You'd think that one almost would move like Apple, but nope. All right, let's listen to Jay Powell. I want some questions here. While he's still reading that, is it true? Is Planet 13 getting hammered? Really? I thought cannabis was up today. Planet 13. Can't even see it here. Let's take a peek over here then. Planet. There it is. How is it getting hammered today? It's down 1.46. I think we gotta have like definition set up in terms of what hammered is versus slightly declining. Let's listen to Powell.
In addition, strong demand in sectors where production bottlenecks or other supply constraints have limited production has led to especially rapid price increases for some goods and services, which should partially reverse as the effects of the bottlenecks unwind. Prices for services that were hard hit by the pandemic have also jumped in recent months as demand for these services has surged with the reopening of the economy. To avoid sustained periods of unusually low or high inflation, the FOMC monetary policy framework seeks longer-term inflation expectations that are well anchored at 2%, the committee's longer-run inflation objective. Measures of longer-term inflation expectations have moved up from their pandemic lows and are in a range that is broadly consistent with the FOMC's longer-run inflation goal. 2 boxes in the July month.
How'd he mess up all of his papers? Like all of the edges of his papers are all messed up. Oops, that's CNBC.
Maximum employment and price stability depends on a stable financial system, and we continue to monitor vulnerabilities here. While asset valuations have generally risen with improving fundamentals as well as increased investor risk appetite, household balance sheets are on average quite strong, business leverage has been declining from high levels, and the institutions at the core of the financial system remain resilient. Turning now to monetary policy. At our June meeting, the FOMC kept the federal.
Who believes Jerome Powell? Are we resilient?
Maintained the pace of our asset purchases. These measures
they do look like little devil horns in the paper. Oh gosh.
Ensure that monetary policy will continue to deliver powerful support to the economy until the recovery is complete. We continue to expect that it will be appropriate to maintain the current target range for the Fed funds rate until labor market conditions have reached levels consistent with the committee's assessment of maximum employment, and inflation has risen to 2% and is on track to moderately exceed 2% for some time. As the committee reiterated in our June policy statement.
All right, the statement's a little on the boring side here. Let's go back to the sticks. Wait for Q&A again. Yeah, Planet down now 2%. MREN down 13.5. Newegg's down again 14.57. Let's take a look at it. Yeah, look at that. Come on, folks. It's like the definition of a momentum mover there. That's not a surprise. It's just unfortunate, but that is what happens. Very Good Food Company. Wow, Very Good Food Company down at 255. Jeez. What happened here? It's just been straight down. Yikes. Headache Mining, Nordstrom. Yeah, just recovery's getting beat up. Even like a win. Let's see. Yeah. Yep. Recent beat up has actually accelerated from last time we drew a trend line. Still listening to Statement over here. See if he's what party's on now.
Participants expect that progress will continue. We will continue these discussions at coming meetings. As we've said, we will provide advance notice before announcing any decision to make changes to our purchases. We understand that our actions affect communities, families, and businesses.
Arcimoto's up 5.2% today. Nice. It was literally down 5% yesterday.
That Listens initiative will further strengthen our ongoing efforts to learn from a broad range of groups about how they are recovering from the economic hardships brought on by the pandemic. We at the Fed will do everything we can to support the recovery and foster progress toward our goals of maximum employment and stable prices. Thank you. I will look forward to our discussion.
Ooh, questions.
Thank you, Chair Powell, for your testimony. Our economy looks a whole lot better today than it did last year. We still have a long way to go. Yet, many of my Republican colleagues have been stoking inflation fears, demanding that we pump the brakes on our economic recovery, complaining that we're just investing too much money in the American.
Oh, has this become a Republican versus Democrat thing? I didn't even think about that.
In families for decades, they can join Democrats in the fight to raise wages, to lower the cost of health care, to make housing.
Oh, I hate identity politics so much.
Of course, most of them won't say aloud what all this inflation alarmism is really all about. It's simply they don't want workers to have more power.
Wow.
In reality, the biggest risk to our economy, Mr. Chairman, is our economy is not doing enough to empower workers and not doing enough to curb Wall Street greed and excess. Chair Powell, my question is, you've supported Vice Chair Quarles as the Vice Chair of Supervision, his efforts to weaken capital requirements at the largest banks through revisions to the stress capital buffer, and you oversaw weakened CCAR stress tests, which ultimately decide how leveraged the biggest banks are. Governor Brainerd has pushed back against your efforts to weaken financial regulations. President Rosengren of the Boston Fed made the case that strong financial regulation enables the Fed to be more aggressive in its full employment mandate. President Mester of the Cleveland Fed, President Kashkari of the Minneapolis Fed are outspoken on the need for the board to keep its eye on financial.
Quick note, if you are going to be in or near Bakersfield this weekend, I'll be holding a rally there, so look forward to seeing you in Bakersfield. And then we've got some pretty neat events planned throughout the rest of California. Giveaways, signs, flyers, competitions. It'll be fun, so stay tuned. One of the things in the competition we're planning will actually create like 10 chances for subscribers to, 10 people will have the chance to come fly with us. It'll be really fun, so stay tuned.
So I guess I would say with the stress tests, the severity of the stress tests has very much been maintained. The effect.
I'll go to meetkevin.com for the Bakersfield rally.
Raise capital requirements for the largest firms, and they did manage to get through the recent pandemic and the acute phase of it and the recovery, and did their jobs during the so I think
we will be indoors in Bakersfield. Don't worry. Again, go to meetkevin.com to come to that rally.
We limited their distributions during the pandemic, and their capital levels actually rose quite materially during the course of the pandemic. So financial system is strong and the banks are strong. I have felt, and I've said on a number of occasions, that the level of loss absorbing capital in the system is about right. I think the experience of the pandemic bears that out. I would be prepared to deploy the countercyclical capital buffer if I thought that the conditions we laid out were triggered, but I haven't so far felt that way.
Every time the Fed is, thank you for that.
We're still working on the details of the competition, but really the competition is going to be about who can get out the most yard signs and flyers. We're going to have like this 50-day run where we got to get the vote out. It's going to be fun. So stay tuned.
Even during the pandemic, we empower workers by maintaining tight labor markets and strong.
But we'll end up using the Meet Kevin app to orchestrate that.
Enables the Fed to be more aggressive in helping workers, and that should be your mission. It's time, Mr. Chair, respectfully, you change the way you think about regulating the biggest banks. One other question, Mr. Chair. In addition to adopting pro-worker financial stability policies, the Fed.
Wow, Workhorse up 5.56 here while we listen to this committee hearing. We've also got Arcimoto up 4% here. Root up 3.54. SoFi up 3. TTCF 271. Lemonade 251. C3AI coming up about 2.3% today.
Civil rights community and by banks. My question, Mr. Chair, is the Federal Reserve still committed to full, not piecemeal, full CRA modernization with an interagency approach? And what is the timing?
We're very much committed to that outcome, and I actually feel good about where we are on this. We're resuming our interagency discussions on it, and I'm optimistic that we'll come out with something that has broad support among the community of intended beneficiaries, and by the way, also among the financial institutions, and that it will be a good, solid updating after many years into the more technologically enabled era that will help the intended beneficiaries quite a bit.
And the timing, Mr. Chair?
Working on it now. I think you'll see we're reacting to a very large, analyzing and reacting to a very large quantity of comments and discussing that with particularly with the OCC, but also the FDIC. It's not clear what their role will be at this time, but we hope they'll join in. I think we'll be making visible progress in coming months. I can't give you a finish date yet, but I think we're moving now.
Okay, thank you. We will be watching. Senator Toomey.
Thank you, Mr. Chairman. Chairman Powell, in your testimony, you said that substantial further progress.
Here we go. This guy goes off on him.
Recovery, and I think you cite that as a justification for the extremely accommodative policy that you have. I don't think you're referring to the need for substantial further progress in GDP growth. I think it's employment that you're thinking of. The unemployment rate has declined dramatically, but it hasn't reached the pre-pandemic lows. And I think you've also made references to the workforce participation rate. I guess my question is, isn't it entirely possible that for a variety of factors, not the least of which is legislation that we've passed, the labor force participation rate may not get back to the record highs that we recently saw, and we've made it more difficult for the unemployment rate to get back to the record lows that we were at before? And do you take that into account when you determine how much progress we've made towards full employment?
It's a good point. Are we ever going to get back?
What was happening toward the end of the very longest expansion, was that people were staying in the labor force later into their careers. And so labor force participation consistently remained above all estimates of where it was going to be. Then what happened in the pandemic was a lot of those people retired. So there have been really significant amounts of retirement. So the truth is, we don't know where that's going to settle out, and it'll take a period of years for us to really understand what the new trend is. I don't see that as a problem for the standard we've set forth for tapering asset purchases, which is substantial further progress. We're not going to need to know the answers to those questions to make a decision.
AMC up 8.2.
It will be more of a consideration for raising rates where we've set a higher bar.
Okay, I just hope there's a focus on the distinct possibility that we're just not going to get to those levels anytime soon. Let me turn to housing prices a bit. The Case-Shiller Home Price Index showed housing prices across the U.S. as a whole increased in May by more than 15% from the previous year, and that wasn't a base effect. There was no big decline in May of last year. 15% clearly is making housing less affordable, more out of reach for more people. So the number of voices.
NVIDIA down 786.
About this, the St. Louis Fed President James Bullard said just this week that he is, quote, a little bit concerned that we're feeding into an incipient housing bubble, end quote. Dallas Fed President Robert Kaplan said that the Fed should begin tapering to begin offsetting, quote, some of these excesses and imbalances, end quote. The Boston Fed President Eric Rosengren raised alarms that the Fed's mortgage-backed security purchases may be contributing to the current boom in real estate prices, citing the potential financial stability implications. I guess, I've been clear for a long time. I've been very skeptical about the ongoing mortgage-backed purchases. Are you at all concerned about the unintended consequences that are associated with $40 billion worth of mortgage-backed security purchases that continue month after month?
So housing prices are going up, as you mentioned, around 15%. This is a very high rate of increase.
Oh, thanks, Jessica. I appreciate that.
Monetary policy is certainly one of those factors. There are also other factors. People have very strong balance sheets, so they're able to make down payments. There are also supply factors that are constraining the supply, at least temporarily. So, my best thinking is that the difference between Treasury purchases and MBS purchases for this purpose is not a large one. Probably MBS purchases are somewhat more supportive of housing. That's not their intent.
AMC running nicely here, 9.0% right now. Nice run. Workhorse, Arcimoto up 6% here. Very nice. SoFi up 4%, 4.16% at the moment. For what it's worth, I may have thrown $100,000 into SoFi yesterday and may have sent out an alert when it was relatively close to bottom yesterday for Stocks and Psychology of Money. Just saying. Anyway, get that coupon code link down below.
Virtues of a central bank digital currency being issued by the Fed. One of the things you said yesterday is that one of the stronger arguments in favor of a CBDC is that, quote, you wouldn't need stable coins, you wouldn't need cryptocurrencies if you had a digital U.S. currency. Of course, isn't the reverse also true? If you have stable coins, cryptocurrencies in use, then maybe there's no need for a central bank digital currency. I guess my 2 points. One is it's my view that the development of a central bank digital currency by the Fed would require congressional authorization. I'm wondering if you share that view. And secondly, it is still not clear to me what problem a central bank digital currency would solve. And I wonder if you think there are problems that only a central bank digital currency can solve.
First, I'm legitimately undecided on whether the benefits outweigh the costs or vice versa on a CBDC. Yesterday, I was answering a direct question about a particular argument. I said, in favor, that would be one of the stronger arguments. Okay. I would agree that the more direct route would be to appropriately regulate stable coins, which we don't do right now. And that's going to be a very important thing that we do. So in terms of congressional authorization, there are different views on that. I've said publicly, and
that'd be great if they could actually just tell us for sure, like Tether's good, USDC is good, it's regulated now or whatever, right? As opposed to the FUD that goes on regarding stablecoins. But I mean, some of it is very valid fear, uncertainty, and doubt. We don't have as much transparency as we need in stablecoins.
Authorization. In terms of what the problem is to solve, I think that is exactly the right question. And I think our obligation is to explore both the technology and the policy issues over the next couple of years. That's what we're going to do so that we're in a position to make an informed recommendation. But my mind is open on this, and I honestly don't have a preconceived answer to these questions.
Thank you, Mr. Chairman.
The Senator Menendez of New Jersey is recognized.
Chairman Powell, as the Federal Reserve seeks to fulfill its mandate of maximum employment, I want to discuss with you the tremendous impact that immigration has on the labor force. Isn't it true that over the past 10 years, the immigrant labor force participation rate has been consistently higher than that of native-born workers?
I believe that's right.
Yeah, and let me help you verify that. The St. Louis Fed noted in their study that as of June 2021, the foreign-born labor force participation rate is 3% higher than the native-born rate, and that gap hasn't ever been lower than nearly 2% for the past 10 years. And an important but often overlooked characteristic of these immigrants is their youth. According to the Bureau of Labor Statistics, 71.8% of foreign-born workers are between 25 and 54 years of age, compared to 62.2% of the native labor force. So as the American labor force ages, will immigrants and therefore immigration policy.
Oh, thanks, Julie, for mentioning that regarding the alerts in the stocks group. Thank you for that. Paid for the course in one trade, says Chase. Oh, well, thank you for that. Hey, they're not always up. They're not always up. I just want to be transparent, like no guarantees, okay? But we try.
It's one of the two things that can drive the top line, the other being productivity growth. And in recent years, immigration has been accounted for a significant part of growth in the workforce.
Well, I appreciate that. I'm not asking you about immigration policy. What I am saying is that one of the newest studies shows that nearly 1 in 4 Americans is projected to be 65 years of age or older by 2060. So while America gets older, the overall population is growing at a slower rate than it has in almost a century, leaving unfilled job openings in a future American economy. And I think we should be looking at our immigration policy, whatever that might ultimately be. I have my own idea, the U.S. Citizenship Act, as a source of dealing with the labor market. Now, let me continue on the question of the labor market. One part of the Fed's dual mandate is to maximize employment and understanding what factors inhibited people's ability to work as a key to helping achieve that goal. On page 7 of your monetary policy report, and I'll quote directly from it, the effect of the pandemic on employment was largest for workers with lower wages, for workers with lower educational attainment, and for African Americans and Hispanics. And these hard-hit groups still have the most ground left to regain. And the pandemic seems to have taken a particularly large toll on the labor force participation of mothers, especially Hispanic mothers. That's very much true. So have disruptions in childcare due to the pandemic?
Oh, look at Matterport. It's starting to get pretty juicy over here, if you don't mind. Look at that. 1384. That's for Matterport. It's getting a little juicy. 23andMe sitting at almost $10. Wow. I'm gonna watch this.
Last year, and an additional 14% of parents had to decrease their hours, and this effect was especially pronounced among Black, Hispanic, and low-income households. So, is the effect on childcare on employment isolated only to the COVID pandemic?
Sorry,
Is the effect of the availability of childcare that is affordable on employment isolated only to the COVID-19 pandemic?
I'm going to guess really that the answer to that would be no.
Yeah, and it is no. Studies have shown that working families pay for childcare ending up 35% of their income on average, 5 times more than what the Department of Health considers affordable. So it seems to me that increasing the availability of high quality, affordable childcare, like what President Biden proposes in the American Families Plan, has a positive effect on employment, enables businesses to more easily find qualified workers, and ultimately helps address supply bottlenecks. The same Fed study I just cited notes that reducing or offsetting the cost of childcare has a particularly strong employment effect on Black, Hispanic, and low-income families. The pandemic showed all of the inequalities in our nation, highlighted in a way so dramatically, and particularly communities of color. Now, the employment challenges, we all talk about wanting to get people to work, the employment challenges that people have in being able to work, and they, as I have shown in the Fed's, St. Louis Fed statistics, more gainfully employed than native-born. It seems to me we should be working on making the pathway easier so that businesses can have qualified workers. Thank you, Mr. Chairman.
Tesla's up 1.5.
Senator Rounds of South Dakota is recognized for 5 minutes. Thank you, Mr. Chairman. Chairman Powell, once again, it's good to see you, sir. And I have most certainly appreciated the time that you spent trying to not only educate us, but
10% on AMC now.
So I understand that clearly you've made it your mission to adhere to the guidance for the Fed, in which you work to maintaining 2% inflation over a period of time, as well as full unemployment or full employment. And when we talk about it, it's always a combination of which one you're more focused on and how you maintain that, while at the same time responding appropriately in a non-political way to the actions of Congress and the administration. I'm just curious, with regard to today's position, we're coming out of a pandemic. We've put a lot of fuel into the economy with direct payments and so forth. And people are trying to get back to work right now. And yet we've got inflation, which right now in this current state seems to be above a 2% rate. Can you talk a little bit about the measurement time period that you believe is appropriate for shooting for a 2% goal? And if there is a concern that you would express or that you follow up with when we talk about overinflating or perhaps putting fuel in, what concerns you would have and how you would respond to congressional activity?
So the inflation that we have today, what we said is that if inflation runs below 2% for an extended period, we want inflation to run moderately above 2% for some time. This is not moderately above 2% by any stretch. This is well above 2%, and we understand.
Yeah, I'm not looking at AMC at all even right now. It's gotten so expensive.
Which is a tight labor market, a tight economy, that kind of thing. This is a shock going through the system associated with reopening of the economy, and it's driven inflation well above 2%. And of course, we're not comfortable with that. In terms of the test that we articulated, we said we wanted inflation to average 2% over time. We didn't tie ourselves to a formula. What we really want is inflation expectations to be anchored at 2%. Because if they're not, there's not much reason to think that inflation will average 2%. So that's really how we're thinking about it. What's the challenge we're confronting is how to react to this inflation, which is larger than we had expected or than anybody had expected. And to the extent it is temporary, then it wouldn't be appropriate to react to it. But to the extent it gets longer and longer, we'll have to continue to reevaluate the risks that would affect inflation expectations and will be of a longer duration. And that's what we're monitoring.
You've been very careful, and I've appreciated the fact that you have done your best to be apolitical in this regard. And yet, at the same time, we're going to have a debate about whether or not we need to add additional fuel to the economy in terms of additional payments to individuals.
Yeah, did I say AMC? I did mean Moderna. I said AMC. Oh, sorry. No, I totally meant Moderna. My bad. Yeah, I thought that Moderna is a little expensive right now. My bad.
Goal of 2% inflation and full employment. How do you see this right now with inflation right now being the focal point, and yet the possibilities of more dollars being put into this economy in this recovery stage? What concern would you express, if any? And I know that your job is not to give us advice, but rather to respond to. What are the tools available for you to try to maintain that long-term goal of 2% during a time in which Congress may very well be adding additional fuel to the fire, so to speak, for inflation?
So the way it works is we watch what Congress is talking about, and then ultimately, and there reaches a point at which our staff will say that looks like it's got a good chance of happening, and then we'll put something into the staff will put something into the forecast, and all of us will make our own judgment about whether that was the right thing to do, whether it's too big or too small. And we never then take that into the public sphere and say, please don't do that for this reason or that reason. It's really not up to us to play a role, as you know.
But the tool that you would use would be within monetary policy of the price of money.
Always, the tools we have are, in monetary policy is to raise interest rates, to tighten financial conditions more broadly, to slow demand down. And that's how you get control of inflation. And that's what you do. At a time like this, though, policy is so accommodative. It'll still be accommodative after we slow asset purchases, ultimately stop them, and then raise interest rates. It'll be accommodative for quite a while. But that's what we do, and that's what we will do when and as we need to. In the meantime, we're trying to understand this particular inflation is just unique in history. We don't have another example of the last time we reopened a $20 trillion economy with lots of fiscal and monetary support. We don't. So we're just trying to we're humble about what we understand, but we're trying to both understand the base case and also the risks.
Mr. Chairman, thank you very much for your response. And Mr. Chairman, thank you.
Senator Round. Senator Warner from Virginia is recognized.
Thank you, Mr. Chairman. And Chairman Powell, it's great to see you. Thank you for your good work. One of the issues that you and I spent a lot of time talking about over the last year plus has been access to capital issues.
AMC up almost 11% here now.
Communities of color, we lost 440,000 Black-owned businesses last year. And as we've discussed in the past, I've been a big advocate with many on this committee on both sides of the aisle to promote investment into minority depository institutions, into community development financial institutions, and actually working with former Secretary Mnuchin, we got $12 billion into the relief package back in December. Some of that will go into, as you know, Tier 1 capital into the CDFIs, which could actually increase their lending capacity by about 50%. But getting that access to capital to low and moderate income communities is really, really important. Is there more that the Fed can do? Let me give you a two-part question. The Fed can do to support CDFIs, and is there anything similar to programs like the Fed's Paycheck Patrol PPP program liquidity facility, which could also potentially be used? I know, again, we've discussed some of these things, but I'd like to see if what your current thinking has been on this issue.
So we do see, and we saw particularly during the pandemic, the good that CDFIs and also minority depository institutions can do and we're doing. And we try to provide whatever resources we can, and a lot of it is just engagement and things like that, and also including the CDFIs in the PPP liquidity fund, and doing everything we could to incorporate them in a way that was useful to them. So all of those things are good. I think if we could think of more things to do within our mandate, given our authorities, we would do them, because we do see the good that they do in reaching communities that are not necessarily reached by other banks.
And I do hope, beyond CRA, that we can, look at, I've got a lot of community banks as well that want to try to get into this market, and got some ideas I'd like to come back to you and the Fed on, because I think sometimes there's a feeling that there's not enough regulatory discretion if they want to kind of lean into lending into low and moderate income communities. I wanted to raise one other issue. I think we all know housing prices are up dramatically. Matter of fact, the Federal Housing Finance Agency's house price index showed that house prices were up 13.9% over the 12 months ending in March 2021. I know a lot of discussion around inflation here. Obviously, if housing...
Well, I think what we might do is circle back on some conclusions after the hearing. I expect a lot to be pretty similar to what we heard yesterday. So far, that's been pretty true. We've got AMC right now running about 10.17%, which is pretty exciting. Right there with Lordstown Motors. Lordstown Motors just under $9. Pretty low relative to its recent past, although potentially properly valued given the risks associated with the company going bankrupt and even individual executives dumping their shares. Workhorse up 6.12%, just over $12 here. Tattooed Chef 3%, Neo 3% to the upside, almost back to 45. EXPI 247, Invitae 2.0, all to the upside. Etsy, Palantir, DraftKings, Enphase, Tesla, all up just a little bit more than 1.25%. Tesla 1.22%. Towards the downside, we got Emrin, BTX, Big Digital. Big Digital, folks, sitting at 0.86 right now. It flew under $1, while Bitcoin continues to struggle to hold on to any form of support in the low 30s here. It just has been trending down and down and down. Not very exciting. Anyway, I do want to remind you 3 things. You can get the Meet Kevin app on your phone. It will be in Bakersfield this weekend. You can sign up through the Meet Kevin app, where you get all the notifications for videos that I post, or you can sign up for events. And soon we'll have our competition, which will be really fun. You can use that 40% off coupon code linked down below to join me in the wonderful programs, which we're going to jump on over to the course member live stream now. And of course, the next thing is, well, I'm not exactly sure what the next thing was. There was another thing. Oh, of course, I'll be in Bakersfield this weekend. That's what I wanted to mention. So if you want to come to a free rally and meet up, we'll see you there. Go to meetkevin.com to sign up. All right, folks, thanks so much for being here. I'll catch up with the rest of what Powell says after the course member live stream, and we'll see y'all soon. And good luck to everyone investing. Thanks.